Thank you, Mr. Chairman. Chair Yellen, welcome back. It's good to see you again and good to have you in front of our committee. Our economy continued to see strong employment gains and economic growth at the end of 2014, but we know the improvements in the economy are not being felt by enough Americans. The gains we've made over the past 5 years, 11.5 million net private sector job growth. The last 5 years come on the heels of 9 years when we lost 4.5 million jobs. Some pundits and politicians have been predicting runaway inflation for years. They clearly don't have a very good grasp of what is happening for most Americans. Low wage growth has continued for the majority of Americans. The declining participation in the workforce is troubling. In fact, as you've pointed out, Madam Chair, the income inequality gap has actually widened during this recovery. It's good, Mr. Chairman, that we began our session today by commemorating the Selma foot soldiers. We must also note, though, that the wealth gap between white and black American families has widened. Low and middle-income Americans haven't benefited much from low interest rates. Workers with stagnant wages have trouble saving for a down payment or their retirement or their children's education. These are issues that Congress should be addressing, but the everyday struggle of Americans needs to be part of the Fed's consideration in making monetary policy, too. I appreciate, Chair Yellen, your announcement last month of plans to create the Community Advisory Council. It will have 15 members, meet twice a year with the board in Washington to offer perspectives on their economic circumstances and the needs of low and moderate income communities and consumers. I hope the entire Federal Reserve System, the 12 regional banks, as well as the board in Washington, will engage community leaders way more than they have in the past. Will do what you have done by setting the tone in Washington and incorporate diverse perspectives into their decision-making. We too often hear concerns that the Fed is a system that is run by and to benefit the very largest banks. Last November, I held a subcommittee hearing on one facet of this, regulatory capture. The hearing explored concerns about the culture of the banks and the regulators. A regulatory culture that is fair and tough, that challenges groupthink, that produces rules and regulations designed to strengthen the financial stability of our economy, will protect Americans' financial interests. I applaud the Fed for finalizing strong rules for the nation's largest and riskiest financial institutions. I encourage you to move forward to finalize outstanding proposals so that everyone will benefit from the certainty of having appropriate rules in place. It's been more than a year since the Fed released an advance notice of proposed rulemaking on commodities trading and physical asset ownership. For example, in today's papers, there were reports of a DOJ investigation of 10 banks for activities in the precious metals markets, and we have yet to see a proposed rule. The job doesn't end there. You must then send the message to your examiners that these rules must be implemented and enforced. Finally, while some of my colleagues are eager to help you and the Fed decide monetary policy, I think that's the wrong role for Congress. I'm all for transparency. I think more is better as a general rule, but every one of us knows there are times when you can do better by having a candid discussion in private. Our real goal must be to have a Federal Reserve that works for all Americans, to have a strong economy that benefits low and middle class, low wage workers and the middle class as much as the wealthiest, and to have a stable and diverse financial system that provides opportunities for all Americans, not one that threatens their savings. That is why your dual mandate to promote price stability and employment, and I so appreciate perhaps more than any of your predecessors, or at least as much, understands the dual mandate, including employment, how important that is. It remains important today. Thank you.